Hey, Carlo.
Hi, Michael. How are you?
I'm good. We are actually live now. So, how's it going, everybody? Thanks for coming.
Hello, everyone.
Let us just fix the camera and start. That's my new logo over there, or sign. Alrighty. So, welcome, everybody. Thanks for coming to today's show. So obviously it's a holiday in the US. The indices are working, but the stock's not. So we decided, to take a minute and maybe do some live Q&A. And if we will have time, we'll talk a little bit about the market as well and look at some charts. But this is a great time for everyone, just to reassess, analysis, do some analysis, some trading journal work, anything that you can do in order to prepare yourself better for the next week. So one of the things we will touch and talk about is definitely those questions that you dropped, that a lot of them covering some topics regarding to trading, not necessarily about tradethepool, but actually in general about trading. So we will definitely cover that. Today, Carlo is with me, one of our guys in the content department, and he will ask the questions that you sent us. And I think we are good to go. So, Carlo, let's start with the first one. Drop it. Tell me what it is. We will write it also in the chat for those of you who maybe missed it, and let's try to answer it.
Look, actually, Michael, we can maybe start with the guy on YouTube right now, Alan Crapo. He asked, what are the actual requirements to pass the swing trading evaluation? Our website gives 3 different answers, but maybe it's time to sort of straighten it out, right?
Yeah, so I'll start actually. Thanks, Alan, for the question. And for those of you who maybe missed the questions, or just have a different question you want to ask, feel free to drop them in the chat. So this is the question Alan just asked. So I'll start with this. We are working on modifying the day trading and the swing trading programs. So hopefully we will have it within a month and a half. This is the first time I'm saying it live, so there's tons of excitement around it, and we're working on it literally day and night behind the scene in order to prepare it for you guys. So there are going to be some major changes for the good for you guys on the day trading programs and the swing. So currently, the criteria to pass the evaluation are in the website as it is, with the max drawdown and of course the target. And soon, real soon, we will launch a new program for the swing account as well, as I said, and it will be, first of all, an easier way to pass the evaluation, and it will give you, at the end of the day, more opportunities in order to trade the US market and potentially later on some other markets as well.
Exactly. Like, guys, I mean, look, we're working really hard on this new program evaluation. So it's for you guys. It's not for us, really. Look, stay in touch. Will you hear from it soon? All right. So you want to move on to the next question?
Yeah, go ahead.
The next guy asked, how does one manage his time out of trading? It seems like trading becomes your life. You have your partner next to you. You're actively trading. He or she asks you a question, and it seems like you're so driven to just, short or long or get out of the trade. So how does one manage his time?
Yeah, first of all, that's a great question, right? Because I will tell you what I'm doing today, but it will obviously, it's more relevant to talk about mostly when I didn't have tradethepool and I traded like literally day in and day out, just sitting at home and doing only that. And of course, first of all, when you start trading, even in the middle of the way, you always want to trade, right? Because all of us here, I'm guessing at least 99% of us are actually very happy to do that, right? We enjoy doing the trading part. We enjoy clicking the mouse key, analyze it, see the trade, manage it. All of those things are super exciting for us, right? Although trading is supposed to be boring. And when it comes to, like you said, like the guy said, when you're not trading, you're still thinking about trading. You're doing analysis. You're going through your trading journal. You're thinking of the last trade that you did or the last day that you traded. Those elements are always running through your head. I remember one thing I used to say to the traders that I trade with, when you close your eyes at night and you actually seeing a chart like candles in front of your eyes, this is the moment when you say, you know what, I'm in the right place. Like, I made it. I did a jump, an important jump in my trading career. So definitely this is something you want to do, even if you're out of your trading, those 2 or 3 hours that you're literally trading. Obviously, besides that, so you have like roughly 30 minutes to an hour that you do your pre-market preparation. And then after you're done trading, you have, again, roughly an hour that you want to have time just to sit and reassess, see what happened, or recap the trades that you made, generally about the day, how it went through, your psychology during those trades, all of the relevant spectrum. And after that, or besides those 4-5 hours that you dedicate to trading and analysis, you can do whatever you like, general stuff. You can be with the family or go to the gym with your dog, whatever it is that you like to do. But you do need to have this 30 minutes to an hour before the trading, then the trading, and then roughly an hour after you're done trading, just to cover everything that you did on that day. Yeah.
All righty, great question and
Yeah.
great answer actually. Look, one of the guys here says, VSync, I just try to recruit my spouse into trading. Good luck.
Yeah, that's also a good one. Actually, that's a funny one, because when I was trading, at home, and I used to go to the shower, like it's evening for me, so I used to go to the shower, and then I always told my wife, sit down and be on top of it. If you see that the price is going to X, move my stop loss to Y. So I literally taught her how to manage at least the trading platform, how to move the stop loss and such, and that was great. So that was my funny way to get my wife into trading as well. Yeah. Let's go to the other one.
Look, there's a lady. Go ahead.
Yeah, go ahead.
Look, there's a person here, Anaida Marsh, says, do you consider to change the drawdown rules from unrealized to end of day? Something more trader friendly? Yeah,
okay. So in that regards, the current answer is no. Basically, the drawdown, actually, we have a huge benefit that advantage that we have in TradeThePool, where we actually, for example, for the daily pause, we don't do it as a trailing, right? So if you made $1,000 in a day, and it's still the same day, you can lose the $1,000 plus the daily pause. Let's say another 700. Something that in most cases it's super rare to see on other prop that doing futures or forex, where they actually move your stop loss and trail your daily loss, daily pause. So I think we're good on what we have right now, because the benefit of having that static daily pause, it's incredible. And we see that also for our traders that use that, because instead of blocking yourself from actually getting your daily pause very, very quickly once you have a losing trade, we actually give you enough buffer to play around with it. Go ahead, Carlo.
Alrighty. We can move on to a different question. Sorry.
Yeah, and you can continue. You can continue to drop them in the chat as well. We do have the form that we sent you earlier. We will answer those questions, and then we will talk a little bit more about what you're putting on the chat right now.
I guess we can go to something more general, right? Traders always ask about psychology and then emotional management and stuff like that. So I guess this question really gets into that. So maybe we can go with, this question. Do you consider the change? Sorry about that. That was not the right question. He says, Mickey, how do you keep the emotion intact and control while being in a trade? How do you not get overwhelmed while being in it? And thoughts on that.
Yeah. So can you write it down, or did you? Okay, here it is.
Will do.
No, not this one. This one. Okay. So how do I keep the emotion and not get overwhelmed? So I'll start with the end. So in most cases, we will get overwhelmed when we're putting more extra risk on that trade, right? So for example, if I'm used to risk $50 in a trade, and right now I'm trading $100 or $150 risk, then that in most cases will get me to the overwhelming feeling, and in most cases also will change my decision making, the logic decision making that I need to do in regards to my trading. So the first thing you need to do is just check your size. Check if you're risking too much, if you're taking too many shares, if you're buying too many shares. You can do that, but by applying one rule, and that's the 3 losing streak rule. So for example, I'm asking myself, okay, I'm taking a trade with $100 risk. How would I feel, and how would I will react if I would have 3 strike losing trades, right? So for example, 100, then another 100, then another 100. So if I'm losing $300, right, it could be one day after another or in the same session. If I'm losing those $300, what will be my reaction to it? Would I go into a revenge mode and start, looking for that gambling trade, or would I stay focused and cold and continue to trade it as I should be? If you have that point, you will find that point where you feel comfortable with that balance point, and then you can say, okay, I'm okay of trading $100. If not, reduce it. Ask yourself the same question: $70 to a trade. If I'm losing that $70 3 times, would I still be okay? Would I feel comfortable trading? And if the answer is yes, so that's basically your balance point that you want to stick to. That's in regarding to the overwhelming part, because once you will find that sweet spot, you won't be afraid if the price will go against you, and you won't be too excited if the price will go to your favor. You will feel comfortable in what you're seeing on the chart, and in most cases, it won't affect your trading. Like on the technical level, you won't run from that trade super fast, and you will be able to hold it enough until it will reach your profit target and such. And that connects also to the first question and how to keep the emotions intact. What else?
Look, one person in the live chat asked about the 10-cent share mandatory, like the price movement, right? Is it a mandatory rule? And is it a trade the pool sort of certain rule? I think this is the question is about.
Yeah, so it is. Yeah,
that's exactly right. Look, if you cannot manage a 10 cents, that means you're probably not looking at the right sort of entry point, right? If it doesn't move right, maybe the entry point wasn't the best.
There are obviously a lot of penny stocks that not doing the 10 cent, not moving 10 cents, right? But the thing is about in what we are looking for, at least, we are looking for volatility and we're looking for liquidity. If you trade in a stock that doesn't do even 10 cents, although it's percentage-wise is a lot, but if they're not even doing that, then it's not the right stock to trade. Even if you trade in penny stocks, and most, I don't know, not most, but a lot of our traders trade penny stock, and they're not specifically looking for those that moving 5 cents. They're looking for that penny stock that today have some crazy news, around it, and this is why it's popping up from $1 to $3, and then you got plenty of movement, plenty of liquidity, plenty of volatility, and those are the stocks that you want to trade if you're trading penny stocks, or generally when you're trading, because at the end of the day, technical analysis and what we mostly do here, right, looking at the charts, the price action is based on volatility and liquidity. And if you're missing those two, then you're missing the point of creating a better pattern, behavior, and market structure and such.
And you've got Jack Skahey saying that choose penny stocks that has low float. Is that a good advice?
Okay, let's move forward.
Alrighty. All right, this is about the trading halt rule, right? So basically, the trader asks at what point is a funded trader move to the live condition? And then the second part of the question is the 8% halt rule. Does it apply to pre-market or after hours, seeing as though there are none?
Where's that? Did you write the question? Okay, yeah, got it.
Yeah.
Just so I can pop it.
Take a while.
Okay. All right. So this is a great question that someone asked, and let's talk about it. Obviously, I talked about it many times before and during interviews and such. First of all, when you move into the funded phase, right, after you pass the evaluation, it doesn't really mean that you're going on a live conditions, right? It's basically the risk department job to decide how to profile you as a trader, and then decide if we want to take the complete account to the market, if we want to take some of it, some orders, specifically trades, that's on a daily basis, on a live situation where they decide, obviously with algos and the rest of the stuff that they have in that department. And once they decide, they will take you to the market or not. On your end, you're on a funded account, so it doesn't really matter on your side, besides the fact that we are handling the rest of the risk on our side. We might take, if you're buying 100 shares, we might take 100 shares with you. We might take 200 shares. We might take 50 shares. It's on our side, right? But on your side, as a funded, it doesn't really matter for your conditions. Besides one thing, as the guy mentioned here, that if we do take you to the market from time to time, you won't have the ability to short everything. It really depends on the liquidity provider that we're working with, right? So if, for example, Interactive Brokers is one of them, and you're trying to short something that Interactive won't allow it, obviously we can't do anything about it. It's a rare case. We do have a bunch of liquidity providers and also some very good relationship with them. So we do get some extra benefits on that. But so it's a rare case, but still can happen. Regarding the 8% halt rule, yeah, it doesn't apply when it comes to pre-market or aftermarket. What else?
Alrighty, we got a question here. I put it in. It says, average risk-reward ratio of the successful traders who passed the evaluation phase. Can vary from time to time, but Mickey can explore on this.
Okay, that's a great question. On average risk-reward, first of all, we need to understand that obviously there are hundreds of traders on the funded account, and we need to understand that some of them trade in penny stocks, some of them trade in large cap, some of them mid cap, some doing mini reversals, some doing breakouts, pullbacks. So it really depends. Taking a full average is not the right thing. Also, there are traders trading the mini buying power with $20,000, but also the guys that trading 260,000. So taking literally an average of all accounts is not the correct move. It's actually understanding the type of a trader, like the profile of a trader, and then checking the stats of those traders. So for example, if we have traders that trade in penny stocks, right? Like that's the profile, traders that trade in penny stocks. So they are more aggressive, mostly when they're short selling it. And now we can look at the risk reward ratio. In most cases, for the penny stocks is around 30 to 40% of success, not success rate, sorry, risk reward ratio. So on success rate, 30 to 40%, the risk reward ratio is roughly 1 to 3. And that's, and you can see that also on the funded interviews on our website or a YouTube channel. We upload one every week. So I'm showing, when I'm doing this interview with them, I'm showing their stats. So you can go over them and just have, just have an idea how it looks like. And so roughly 30 to 40% success rate, 1 to 3, that's kind of, those are roughly the numbers for penny stock traders. But if you go to a large cap, you will see a much higher success rate with a little bit lower on the risk reward, right? And it makes sense because when you trade in a penny stock, especially when you short in a penny stock, it will pop up, right? Get too extended, and then you will start shorting it. But there's a lot of plays and a lot of manipulations before it drops. So you will take your first hit and take your first loss. You will try with another pop. You will try to short it again, take another loss, and then maybe the third or the fourth will work for you. So this is why the success rate are much lower when it comes to trading very volatile assets. And the risk reward ratio is higher because once it dropped, right, there's a classic pump and dump in penny stocks. So once it dropped like crazy. And if you handle it right or manage the trade right, you can take much more than comparing to trading NVIDIA or Tesla, when in most cases your success rate will be higher on a pullback, but it will reach that extra resistance level, the next resistance level, and you're out of that trade. Alrighty, Carlo, let's go.
Alrighty, you got another one here. Ways to enter running in stocks to keep from buying the top.
Okay, to keep from buying the top, right? So basically, you're suggesting, or what you're saying here in this question is that in most cases you will try to buy it, but then you're not sure if and it's starting to run, but you're not sure if you reach the top or not. So first thing, probably the most important thing, the market structure is based on supply and demand, right? Or resistance and support levels. So the first thing to look at is if we are reaching a major resistance level. Maybe later on we will share some charts and talk it over a little bit more. But just imagine that the stock is running up and you're going back and you want to see if there's a major resistance level, right? So you go to the hourly chart, for example, or the daily chart, 4H, and then just have a look. When is the next resistance level? If there is one very close to where you're at right now, then obviously you want to skip this and not run into this wall, right? So that's the first thing you want to do, just look for the resistance level. The second thing is look at the volume. You know, a lot of the times when you see high volume coming, or most of the books that you will read will tell you that you need high volume when it comes to moving up or down majorly. But you need to realize you need to understand when is the volume is relevant to continuation and when is exhausting, right? So if you see the price already made a strong move to the upside and now you see increase in the volume. It's basically showed you a capitulation and not a continuation, right? So you also need to understand how far the movement went, how strong it was, and then the volume related to it. So resistance, volume, movement, those elements will keep you away from buying the top. And I always talk about it in videos. I use the MACD as well to get the feeling of it. If we are reaching the top, if we have a negative diversion at the top, it makes sense that the price will decline. So if you combine a few elements together, a few parameters, then you will realize that this is literally the top, or at least you want to wait for a pullback in order to buy. Tons of questions. I love it.
It's a lot of questions. But look, maybe there's another technical question over there that talks about the Wyckoff method. And he says, that's technical analysis of price action and volume, like that method that I mentioned. Is it the only way to be consistent in trading? And then from his experience, other indicators is not much of a help. So what are your thoughts on that?
Yeah, that's a great question. So first of all, it's not about, I'm guessing it's not really about the method, right? It's about understanding, because there's a lot of strategies that work, but you actually need, first of all, to understand the market structure, just the behavior, right? And when you're using Wyckoff or when you're using Charles Dow theory, they give you that method, they give you that Thanks. Okay, I clicked the mute. Sorry, I clicked the mute for a second.
Thank you, guys. Thank you. Appreciate it.
That was a great sentence that I just said. Let me try to repeat that. Okay, so I don't know where we got caught off, so I'll start from the beginning. When it comes to trading, it's not about really there are strategies that work, and a lot of them, but the first thing, like the core of it, starts with the price action and the volume, the Wyckoff or the Charles Dow theory, right? And you want to understand that first before starting building your strategy, because when you have the right core, when you understand market behavior, you can build on that. If you're just looking for, a strategy of indicators that will tell you when EMA 20 cross the 50 EMA, then click the mouse key and buy, it won't work. It won't stay consistent no matter what you will do. You need first to understand the behavior, the buyers, the sellers, the cycle of a market. And it doesn't matter if it's NASDAQ, Dow, or S&P. It could be also a penny stock. The same behavior will apply all the time. You will see there isn't a pump and dump works, right? It's the same thing as Wyckoff. You pump, everyone is jumping in. There are guys that come in at the top of the range because they're seeing the price going much higher. So they say, I gotta be on that trade as well. The FOMO kicks in, the fear of missing out, and then the drop, right? It's always the same concept. And you can see that on a 1 minute chart, you can see that on a monthly chart. Every time you will look at a chart, you can find those patterns, the pattern behavior, basically. So first of all, regardless of the strategy, you need to understand the price action and the volume. Once you have it, you can start building on top of that the strategy that you prefer, either a pullback or breakouts or mean reversal, whatever it is. But in order to stay consistent, you got to first understand the core of everything. and then build your strategy, and of course the risk management and trade management and all of that. Just using indicators won't get you far.
Exactly. Look, I'd like to mention I was proud of myself that I started trading, look, very recently, and Michael was proud of it. Look, we can always assume where the market is going. We can hedge, we can speculate, but the technical indicators, at least for what have worked for me so far, is just to confirm our biases. So it's not the be all end all setting the rules of how we sort of execute, right? It's just there for us to guide us.
Yeah.
Alrighty. We got a second question. I mean, a two-parter question, sorry, from a person that said regarding scaling accounts, he has the mini account with a 2,000 profit and so on and so forth.
Okay, cool. Is account scaling automatic? And yeah, so that's a good question for those of you trading with us or thinking of trading with tradethepool. One of the huge benefits that we have, and we have many, I gotta say, is that the fact that you're trading and scaling your account or withdrawing from your account, it's actually still give you the ability to continue to trade with a large capital. So for example, if you scaled your account and withdrew money, let's say you have now $22,000, because he's talking about the mini account is 20,000, and he scaled the account, you reached the 22,000. Now, when you withdraw the funds, you still can trade with 22,000, and that's incredible for those of you who trading with a broker, for example. When you trade with a broker, it doesn't really matter. At the end of the day, you take money out of the account, and you're left with something, and this something will change according to your withdrawal. So in our case, you're trading the same capital even though you withdraw funds, and this is something revolutionary, literally.
I guess the second part is the same person that sent a question. He said, if I purchase the larger account and pass the challenge, will the active funded account be swapped to the larger account since we only have one live account?
No. And first of all, no. Second, you can have multiple funded accounts. A lot of our funded traders have at least two accounts, funded accounts. So it's not necessarily that you will have only one. You can have a few of them. You cannot copy between some of them. You will need to work differently on each one, but you can have multiple funded accounts. Yeah.
A fella just asked if we can talk about Bookmap, a good tool for trading.
Yeah, so Bookmap is one of our partners, a longtime partners of ours. I used it many times before as well. Basically, Bookmap will allow you, that's the gist of it at least, will allow you to see liquidity levels. So if you're looking for those for reversal, for example, this is definitely a great tool you can use. I can tell you that we are working with Bookmap for elaborating or making it a little bit bigger, this partnership, creating a little bit more workflow between the two platforms. So once we will have everything done, we will let you know. But this is definitely a great tool to use. Yeah.
Great. A bit more of a technical question.
Yeah.
He says, Michael, can you please focus on lost trades? He backtested the trade management strategy with SNR. It's good, but he wasn't able to consider if an area is invalid. And when do you add a position? And also, how many entries does one have to trade per?
Okay, so I'm guessing this question is regarding mostly probably the live that I did with our parent company, the Fivers, on my account there, where I'm trading the NASDAQ, and I scaled it pretty nicely, gotta say. And I explained how I do that and the way I work, the method that I use to do that. So if it's that, then that's amazing that you backtest it, like the trade management that we talked about on support and resistance. And let's talk a little bit about how do you understand if that's the right area to begin with, and then also to add to your position. So first of all, the right area will be, as I mentioned there, I always look for major key levels, right? So I'm looking at the hourly chart, and not just that, I'm looking for what I call a naked level. A naked level is basically, or a pure level is basically a very clean area where you can easily see, let's say a stock is sitting on support, pop up, dropped, and then became resistance, right? So you can easily see that the buyers and the sellers switch side, like the resistance and the support switch side. When you see it super clean, it means that a lot of guys, a lot of algos will see the same thing, and they will start to react to it again the next time we will meet it. So that's the first thing I want to do. Go to a higher time frame, like an hourly chart or a 4H, and then look for that pure level that you can easily spot. If it's not that, then there's a lot of just back and forth and a lot of rangy movement, then it's not the right one, and it's probably, even if it will react, it won't be that extra move that you're looking from it, or the extra impact that you look at from it. So the first thing is just looking for a clean level on a higher time frame. That will give you the first entry. In order to add to your position, you just need more parameters that support it, right? So for example, you started on that key level, and maybe the guys in the back can throw the link for that video. That's a very important video. So the guys in the back, if you can hear me, and put the link to that live in the Fivers. And basically, when you find the right place to start building your position, then you ask yourself, okay, what will be the next one below it? Let's say you buy in the dip, right? The price is dropping down, reach that major key level. Now you enter in one chunk, you're scaling into your position, so you're buying. And then you say to yourself, okay, if the price will drop lower, where it should stop? Now that I have the next support level, I know that I can add there if the price will go there, or if the price will go to my favor and bounce from that level, I can start adding again once I'll see a pattern, for example, cup and handle or flag, or any type of pattern that will confirm that this is the bounce up. This is the level I want to start building my position.
Alrighty. I really like this question by Zone Buster, Michael. It says, when looking at the metrics of those most successful traders who are funded and are passed, are they mostly a small cap, large cap, or mid?
Yeah, so as I mentioned, we have a lot of penny stocks traders. Once, because a lot of traders, especially from Corona time, the COVID time, they joined the industry or the trading sector. They are young. Probably most of you guys are in your 20s, early 30s. So it makes sense that a lot of guys don't have enough capital to bypass the PDT rule. For those of you not familiar, if you are in the US, you need at least 25K in order to day trade at least with a licensed broker within the US. So in that case, a lot of guys are just approaching and move it to the small cap or the penny stocks area because it's easier to get the capital to trade on. So a lot of them are doing that, and also I wouldn't say easier necessarily, but it's easier at least to spot it, right? You have the pump and the dump, and there are tons of mentors and educators that are teaching that lately in the last few years, like Timothy Syke and his crew. So, and you're probably guys familiar with that. So I'm guessing this is why we have many penny stocks traders, short penny stock traders. That's at first, but we do have also the mid cap and the large cap. Most of them are either small or large, but we do have the middle as well. Yeah.
I guess there's a question over here. I mean, in regards to commissions, right? He's talking about if he's able to get a real account, meaning I'm assuming that the funded account, will he get a better commission?
So the commissions are the same on the funded account, either the live account or the regular funded, but the conditions remain the same. Yeah, that's about it. But I do want to answer. I see that he said another thing. Current strategy doesn't give a good result when commission is 0.5 cent. Let's talk about that for a second, because this is the important case when it comes to his question or her. Because if you're trading and the only thing that keeps you away from making money is your commission, then something is wrong with the trading part, right? The strategy or the trade management, the risk management. Because commissions are obviously there, and we need to take them into consideration some, but it couldn't be the point that switched the needle, right? Or the shift the needle, or the way you say this phrase. At the end of the day, commissions are there like in the bank, right? When you transfer in money to someone else, or when you're doing any kind of activity in your bank account, you will pay X amount of money, and at the end of the month, it will sum up to something, right? $20, $50, $100, whatever. But it shouldn't affect your account to go negative, right? So the fees are there. We need to take them into consideration, but it shouldn't be the factor that will change, and at the end of the day, your profitability. So I would suggest here to dive a little bit deeper, understand what you can do, maybe hold your position a little bit longer, and then try to take more profit. Maybe scale into the account, to the trade. There are many things you can start to apply in order to change that equation, but understand that you need to do that. Go and search.
That is right. That is right. Another fella gave us a question here and says, are there any limitation for the growth of the account? And if you can remember, Michael, what is the highest yearly payout TTP has done? I'm assuming just to make it easy, that's specifically a funded trader.
Yeah, of course, a funded trader. Let me pop up the question. Sorry, just a sec. Okay. There is technically right now, there is any limitation of the growth. So if you scale your account, you can continue to scale it over and over again, and get more buying power allowance and more daily pause allowance as well. The highest of last year, obviously, was roughly 70K. There's a guy that's been with us from literally the get-go, and you know what he's doing. So yeah.
Exactly. I guess we can move on more to the YouTube questions. There's a fella here named Kadim Dieng. He said, or she said, can you get a funded account without an interview? Maybe a camera shy person.
Okay, first of all, you can. However, and that's the most important thing to remember here, is that those funded interviews that we do them for two major reasons. One, obviously, to get to know you a little bit better, to see what you're about, not just the data, but more as a person, to understand. Because eventually, when you get to the funded account and you trade our capital, we want to understand who's behind it. And And the second thing is that we post it every week, and the other guys, and this is incredible, because once we post it on social and YouTube, for example, and other guys are watching it, obviously they come to Trade the Pool, but besides that, they get inspired. And I guess this is one of the most important things that I didn't have as a trader. And at the beginning of Trade the Pool, when I started it, this is by far was the main thing on my mind, and still is. When it comes to trading, because it's so of a lonely game, and maybe today you have a little bit more and you can ask some on the community, for example, Discord and such, but it's a lonely game. You don't have the guy to mentor you. You don't have someone that actually told you, listen, I passed the evaluation, I made profit, I'm a profitable trader, right? I remember when I started to trade, literally after even few good months or even 2 years, I didn't know that there is someone that actually doing it for a long time. I knew what I'm doing, sort of, and I knew that it's kind of possible to reach that, but I didn't see anyone that's saying that. And someone that watching the interview and seeing literally on their account, I'm asking them questions about their trades, about their payouts, about what they achieved and how they do that. And now you can watch it and get the information and just push your trading. It's incredible. So those two are crucial to us as Trade the Pool, to bring that to you guys at home, just as an inspiration, just to learn more from it and see that it's possible. That's the main thing, because once you reach that, once you land on the moon for the first time, you know it's possible, and now you can do that. So yeah, that's in regard into that. And of course, if you don't want to, we can do the interview without publishing your name, or we can do it also as an audio, another video, and bunch of stuff that will be comfortable to you. But it's crucial to everyone that we will do that.
A great compliment from Shan, who was saying that he learned a lot from those interview videos. So
exactly, and we get that a lot. Thanks, Shan.
Yeah.
If your English is not good, first of all, I'm not native as well, so feel free, and that's totally fine. I mean, it's 2025. It's okay to have a good enough English to speak and not be native. But besides that, if you have a specific language that you prefer to do the interview, we have French, we have Spanish, probably Italian. So we can find a way to manage that. No worries. Russian we also have. So yeah.
I guess
what else?
I just dropped in one of the questions here. The basic essence of the question is: do you have to change your strategy if you already have your own account elsewhere? Once you've sort of got inside a prop firm like Trade the Pool, do you have to sort of change your strategy?
Okay, so that's a good question. Where is it exactly, Carlo?
Just did it now. A few moments ago.
Okay. This one?
That's right.
Okay. So first of all, when it comes to trading with a prop, obviously you will play with your strategy a little bit, right? If you're used to trading, let's say you're trading for a year, 2 years, 3 years, 6 months, and you trade in a broker account, then you're not used to have any limitations except from the buying power. So for example, you're trading, you have a losing day, and the broker won't come and tell you, you know what, you're done for the day, take a minute, this is not your day, come back tomorrow, right? They don't really care if you will lose the money or not. So that's the first thing. When it comes to prop trading, obviously you need to get used to that buying power. If you're not used to that, for example, if you're trading on your personal account $3,000 and now you have $100,000, you need to get used to the fact that you have a lot of capital to trade with and not risk too much out of it. And second, you do have a daily pause when we stop you and say, take a breather, right? So those two, you need to control them or get used to them. Besides the fact that we do have other rules, for example, the consistency rule, that one trade cannot be responsible to more than 50% out of your target, or the 8% rule with the alt, or 10 cents and 30 seconds. So there are rules that you need to tweak your strategy. In most cases, you will have to fine tune what you're already doing and then find the rhythm when it comes to trading on your prop account. It will be different, but as 99% of our traders will tell us, this is the biggest change they did in their trading, choosing Tradethepool and then started to work according to the rules that we set. Because when you have those boundaries at the beginning, maybe, or before that, it might sound like something that you want to avoid, right? If you have boundaries, no one likes limitations. But once you have those, you see that you can actually make progress, because now you're taking a trade and it's a bad trade, you're not blowing the full account just because of that.
That's right. I mean, if I can add anything to that, is that trade the pool, the breezer, yeah. Breezer can be a drink, to keep you relaxed.
This is why I said.
But look, if I can add anything to what Michael said, I mean, really, I think trade the pool creates a kind of more disciplined traders, right? You don't want people, the one and done trades, the binary traders. Look, you can make it for sure, but I mean, with trade the pool, if you want to, I feel like if you want to be that sort of long-term trader, you want day trading to be part of your one of the income sort of coming in. I think discipline is what will sort of keep you intact. So another question here is, what was your turning point when you started trading? I think it's just sort of like a leeway to what the question was before. What made you go from losing to winning consistently?
Yeah, so obviously it won't happen in a day. It's not like waking up tomorrow morning and that's it, I'm profitable and everything is beautiful outside. It's actually a process as we know it. It's like going to the gym, right? For the first time that you will go, it will be hard to lift weight, and you go back and you have muscle pain and all of that. And after a few days, the muscles start to relax and you go again, starting to lift more weight and getting into that rhythm when you actually enjoying it and actually can pull weight without breaking your whole body. So that's literally the same thing when it comes to become profitable. In my way, there were a few points there. Obviously, like I said, it's a process, but there were a few points that I can easily remember, although it's been a while. One thing is that I removed the P&L from my screen, literally closed the P&L window, right? And when I did that, it automatically, like literally when you click the mouse key and you close the P&L, it's just changed your mind completely from focusing on the dollar comparing to focusing on the trading part, the decision making, like the logic decision making of trading. So literally when you click the X button to close the window of the P&L, your minds shift. So you will see that. It's hard to do that because obviously we all like P&L and we want to see what's the profit or loss that we're making. But if you'll do that, you will see that the focus shift from looking at the dollar, I'm up $5, I'm down $5, then looking at the chart, analyzing it better, seeing the price action, the momentum that comes with it. And that will be definitely one of the key that you want to use. At least it worked for me and many other traders that I trained and traded with them. So once they did that, they also saw the shift. So I would definitely recommend doing that. So that's one. And other stuff that I did is obviously going into my stats. And when you gather enough data, which means 3 to 6 months of trading, actively trading, right? Not one trade in a week, but actually actively trading. When you taking those trades and going through your trading journal, what you want to do is not just seeing what's your success rate and risk reward ratio and such, but you want to actually analyze it to the point when you have a bottom line that says on Mondays between 9:30 to 10, trading on large cap with volume X and ATR Y. These are the best trade that I'm taking, right? This is like literally the bottom line. When you combine all the elements and you have the bottom line that says, this is what you do the best. You do the same thing for what you do the worst, eliminate that, or at least decrease the bottom line of the losing part, and continue to tackle that profit line of between X and that. On those kind of trades or those kind of stocks, I'm trading the best way. This is what you want to continue doing and craft it, getting into those positions, looking into what happened there and what worked better than the others and such. So those definitely two keys that you can work with. The third one, I mentioned that also on my live webinar on the Fivers, where I actually talked about the scaling into the position. Instead of risking full $100, let's say you're willing to lose $100 in a trade, instead of risking the full $100, you're actually breaking it to chunks, 3, 5, 6 chunks, and then you take in every time you jumping into that trade or execute another position, right? So instead of risking the full $100, you're risking $20 at first. You see that it goes to your favor or reached a major support level. For example, if you're looking to buy another support level, you add another $20, another $20, another, until you reach that $100 that you're willing to lose. When you build your position, instead of clicking the mouse key and going all in, you give yourself a much higher chance. And in this live webinar that I did a few weeks ago, I showed my stats and we talked about it. And I reached that moment when I had 90% success rate, which is crazy. So once you build your position, you just give yourself or the trade the opportunity to work better than clicking the mouse key. So those three elements will change your trading for sure.
100%. Look, there's another question here by Mustafa Barris, and essentially put it in, and he says, after failing the evaluation multiple times, what are the ones that traders do differently that allow them to eventually get out of the hump?
Sorry. Failing multiple times. We'll get them to the phase when we pass in the evaluation. This is a question that I always ask on the interviews when I found that the traders had a trader had a few different attempts, like 3, 5 even attempts to pass the evaluation, and then on the 6th, for example, it did manage to pass it, or she. And one of the stuff that they're all mentioning is the size. Like at first, as I mentioned before, when you get in, let's say you used to trade $5,000, and now you get in $150,000. It could mess up your mind. This is why I always recommend, doesn't matter your level in trading, start with the mini buying power, like the smallest account that we have. And maybe in the future, we will have even a lower one as well. So start with the smallest one just to get the hang of it, just to understand the rules, the trading platform, craft your strategy around it, get used to the fact that you're trading a prop account and not your own account, and then you can always scale or take another evaluation with a higher account. But if you used to trade $5,000 and then you go and buy $150,000, then it will mess up your mind in most cases and will start affect your sizing. you used to see or used to take 100 shares to in a position, and now you actually put in 2,000 shares in one position. In most cases, it won't go to your favor because you're not used to that psychologically, and then you will start doing all of the crazy stuff that we all aware of and did, the psychological aspect of trading. So the fact that you will start small, understand how to operate around the prop, and then go and build your position, then going with a extra size. So that's one of the crucial stuff, Mustafa.
Alrighty. This is another question from YouTube, actually.
Yep.
The person mentioned, when changing to a live account, does one have to locate shares to short?
Okay, so we did talk about that. So when you go to the live account, it doesn't necessarily mean that you go to the live market. We decide, like the risk department will decide when and if and how to take you to the live market. If we do take you to our LPs, for example, Interactive, that will depends on their basically pool. So if you need to locate shares, if they need to locate shares, that would happen there. But it doesn't mean necessarily that you will go to the live. Really depends on the risk here, how we manage it behind the scene.
Actually, Mustafa also had another question. If we, just before it is way above it, basically saying, well, he has basically an idea if we're ever going to put all of our best traders together in one room doing live trading. Great idea, Mustafa.
Taking everyone in the same room. I don't think that YouTube supports so many traders at once. The StreamYard at least not. But that could be interesting. I always have this fantasy of taking like 20, 30 traders and put them in a huge mansion in Miami. So maybe, and just record it like 2 weeks trading together, learning and doing a lot of good stuff. Maybe we will do that one day, and that could be super great. Yeah.
This is more of a, I guess, curiosity question, right?
Yeah.
He said, just curious, Michael, is TradeThePool the only company that funds stock traders right now, i.e., no competition for other companies so far?
Yeah, as far as I know, yes. Maybe there is one, forgot the name, but offering like 200 shares or something like that. Not something that relevant or even close to what we offer. So yeah, as far as I know, at least, yeah, we are.
Amazing. I think I keep seeing this question, the 8% hold rule, and they keep saying that is it going to change, or because they've seen that in the mini limited edition, there's a sort of change. I think it's a great way to address this issue. Yeah.
So first of all, regarding the 8% rule, as we said a few weeks ago, I guess in 2 or 3 weeks ago, we removed it from the mini limited edition. We are testing the option to remove it from other accounts as well, and we're gathering the data. Hopefully soon we will have the results that needed in order to make a decision. So of course, once we will have something, we will update on that.
Alrighty. Another question by M. Abreu 23. Is there a limit to the withdrawal every 14 days?
Like limit on the amount that you can withdraw? No. There is a minimum of 150 of 300, sorry, but you can withdraw anything that you like.
Alrighty.
Any sum that you like. Yeah.
There's a lot of questions to go back. I mean, we have to go all the way up. And
let's do that. We are here, and there is no market. We can take the time and talk it over as much as we want.
Yes, Trump can wait. Trump can wait. Look, there's one question here. Basically, he says that oh, it's a joke. Actually, shouldn't have read that. It says he bought a gym and it's still not in profit.
Okay.
another person complimented you saying that they've watched most of your videos, and the one thing they've learned is risk management and your approach, basically saying sort of entering it bit by bit, chunk by chunk, and sort of getting that buffer.
Amazing.
And look, good strategy. I have applied it myself, and I just started. So I think it's a great strategy. Great strategy. There's one over here that says, he tried to log into a free practice account and would not take a login information. I think he does not understand that when he logs into the hub, actually the credentials is in his profile. So I think we can address this easily.
Yeah. We can easily improve that, and this is already in the queue to improve it. Just but remember, guys, that joining, you have the hub credentials. So when you log into the hub using your Gmail, for example, and you also have the credentials to the trading platform. The credentials to the trading platform is within your dashboard. So you go to Overview, Dashboard, and you will see a button on the right that says Credentials. Those are the credentials for the trading platform. We are working to improve just a little bit that, because this is something that we get in a lot lately, just to understand where is exactly the difference between the hub credentials to the trading platform credentials. By the way, talking about trading platform, some of you wrote us also in regarding to the trading platform that you want videos about that. So let's, the guys in the back, let's put a link to the playlist of the trading platform. We actually build great tutorial videos for that, for each window, and we will apply more in the future as well. But we have like 17 or 18 videos, short, very easy to understand them, that will teach you very quickly the trading platform. So especially when it comes to, if it's your first time joining TradeThePool, go through that tutorial so you will have a feeling and understanding of how to execute the trade, where you see everything, how to use the features that you get there, so you won't spend time from your evaluation on that.
That's right. I mean, if I can add a little bit to that, we do offer a demo account that, look, I think there's only one way to learn, right? Is to make mistakes. And I've been there. I've been to minus 800. So, it is what it is, but it's a matter of learning. And this is why TradeThePool exists. It's the TradeThePool itself is our cushion to getting better. Seriously.
That's true. And again, as you mentioned, the demo account, you basically, once you sign into the hub, sign up to the hub, you actually can choose, go to new order, choose demo account. You have 14 days to play with it. So learn the platform, do the mistakes, learn the small nuances, and then go to the evaluation and start actually trading and pass it potentially. And of course, the rest of the stuff. Anything else that we have?
There's one above just there. I messaged it, and it says, is there a chance that TradeThePool will ever have an extra platform that traders can choose to trade with?
That's a good one.
It's an interesting question.
Yeah, it is. It is possible that in the future we will have more. Yeah, I won't elaborate more.
One thing at a time, kids. Look, we have new questions. LFC, if we pass the program, but for some reason failed the interview, will we get a refund?
There is no reason for you to fail the interview. No one ever failed the interview. The interview is actually is just to get familiar with you and try to understand your personality and the way you trade. As long as you didn't try to manipulate anything and worked according to the rules, there is no way for you to fail the interview. So yeah.
Amazing. And just before it, there's another question. It says, how long do we plan to run the limited edition of the mini account?
Right. So the mini currently will remain as it is until we will launch the new programs that I briefly talked about when we started. So we are working on something. Hopefully within a month and a half, we will have it done. And once it will, then we will shift to there. Until then, you can play with the mini definitely.
Just before it, it's more of a fundamental question, right? Fundamentals. How do you trade with tickers when there are earnings? XCNC. XCNC.
Oh, okay, gotcha. Trade with tickers when there is earnings. So first of all, I'm guessing you're referring to after the earnings already went live, right? After the data came out. So when it comes to that, this is something that I used to do a lot of the times. A lot of my trading was around earnings season. I used to be very active on the earnings season, and then much less during the phase of going from one to the other. One of the most traded strategy that I used to trade is the reversal gap strategy, which means basically I waited for a stock. Let's take a short, right? So I waited for a stock to drop down with a gap, like opened with a gap after earnings of 3% or more. In most cases, it was around 8%, but 3% and more, that was my rule. And then once it bounced up, so let's say it opened with a gap down, bouncing up, and then I'm looking for the next resistance level to take the short position again. So it's like a pullback. So it's dropping down, pulling back, and then I'm looking for that point where I can short it again to the low of the day. We can do maybe another live where we learn this strategy and talk about it, because we are now in the earnings season. There are many opportunities like this. I might jump to one of our live session on YouTube together with Mitch and Michael, the other Michael, and maybe we'll do a session on how to understand the gap reversal strategy and how to trade properly during earnings. You unmute.
That's right, I am.
Yep.
XCNC did a follow-up question and says, how about longing it when there's a gap up?
Same thing, yeah. So it's gapped up. You're waiting for a pullback toward the gap, not closing the gap up to 80% of the gap, not more than that. So it's pulling back. You're waiting for a major key level, and then you go long when it's starting to reverse. Carlo, mute.
I'm telling you. It's all good. Conrad Clark, he says, Mickey, new BTC highs today. Are you on it?
On BTC, I'm not. I don't know if I can share it, but I just bought Trump coin. There's obviously, you're already familiar with that. Like 2 days ago, he launched a coin, TRUMP, and I bought it today. I don't know, just it's more of it's not really a trading when it comes to those meme coin, obviously. So I'm just putting some money and see what will happen. But I'm not trading the Bitcoin. No, I either trade the stocks or the Nasdaq, S&P from time to time, but mostly stocks and Nasdaq.
Going back to the previous question with XCNC, it's more like a follow-up by a different person. He says, by GR Mora, he says, the same questions for that stock reports right after the bell. How long do we have to wait after the earnings release?
Okay. For a stock report, morning pre-market open. Literally how to trade, like not the reversal gap that I talked about. Once it opened, after the earnings, you can trade it technically at the opening bell. So it's 9:30, you can start trading it. Regarding, if you're talking about specifically the reversal gap that I mentioned, then it will usually happen in the first hour when you will see the drop, the consolidation, and then the bounce up again.
Put in a question over there, and it says, "This is inside. This guy wants inside information. How many funded traders are there currently? They come and go, but give them a ballpark."
This one, right? Yeah,
that's right.
We have a couple of hundreds right now, getting stronger by the minute, definitely. Obviously, we've been around for the last 2.5 years. When we started at the end of August, almost 2.5 years. So it took a minute until guys got to know us, joined the evaluation, understood it, and then started to pass the evaluation. There are guys on the funded account that are new, like every day. We have many of those that jumping in and started the funded account. Obviously, not all of them, even when you reach the funded account, will remain on the funded account. Some of them will lose their account. It's also something that you will have to work with once you get funded, because you just passed the evaluation, you reach the moment when you're actually funded and you can start getting your payout. But you still need to control the psychology not to go again all in and try to just pull out tons of money at once. So the guys that been with us from the get-go, or even a year and above, those guys are actually understanding two things. One is the cushion, the buffer that you want to build. Arbnor, one of the interviews that I did with our funded trader, Arbnor, that's been with us for a while, he talked about it perfectly on how to build that buffer and why you want to build a cushion, meaning you don't want to just make money, take it out, and that's it. You want to actually make money, continue to make money, take some out, and leave a cushion to play. So the next time that you will have a bad day, or even few bad days, you won't blow the account. So this is one thing that you want to consider, just building a buffer. The second thing you want to keep in mind is, again, the sizing, because I see we have a lot of traders that will make, like every 2 weeks, will take $500 out, payout. Will take $300, $700. Won't go to those levels of a few thousands, right? And they do that perfectly, because instead of looking for that one lucky trade that will get you now 20,000, 30, 40, 50,000, they will build it and take every 2 weeks a few $100, and that will be great for them to continue to be and stay consistent, basically, right? Because I talked about it in one of the interviews. A guy that did an interview with me lately, that will be published probably in 2 or 3 weeks, which I said one very important thing, right? It's not about looking for being a 7-figure trader. Most traders won't get to that level. Doesn't relevant if it's for TradeThePool, other companies, your own broker account. Most traders won't get to that level of 7-figure, right? It's like being LeBron James. Not all of them, and most of them won't get to that LeBron James level. But there are tons of great players in the NBA or other field that are doing amazingly good, right? And there are great players. So you can be an amazing player without reaching that Ferrari level, as they sell it on YouTube, and still make great money and stay consistent. Because let's face it, most of us here in the room could be super happy with $10,000 a month, right, of trading from trading. So if you will make $10,000 a month from trading, you would be happy with that, right? And it doesn't mean at the end of the month, the end of the year, it's $120,000. That's great. You don't need to make millions of dollars in order to be happy in your trading. So you rather have year by year that you're making money consistently, and not just one lucky trade that will make you great money. And once you shift that in your mind and switch that mentality, you will again push yourself to a better place as a profitable trader. Because it's a game of consistency. You can have a great year that you made great money, but if the next period you won't make it, then and you will return all the wins that you did from the previous year, then it doesn't really matter.
I guess a bit more of an extension to that question is that, can you explain how the cushion works with profits?
Yeah, where's that? Who's asking?
LFC.
Is that? No.
LFC.
LFC. I don't know, so many questions. Okay. Explain how the cushion work. Technically, it's simple, right? You made, let's say you're trading, you reached the funded account, and now you made a profit of $5,000, right? $3,000. Most traders, inexperienced traders, right? In most programs, they will go and withdraw the money automatically. They will just take it and say, that's great. And they will start over again. And some of them will make it, and some will reach the termination of the account. Instead of doing that, if you want to build consistency, then you made that, let's say, $3,000. And if you want to withdraw, you won't take the full 3,000 out. You will take only 1,000 out. So you keep that 2,000 as a buffer. Now, let's say you continue to trade and you made another 3,000, right? You again withdraw 1,000, 2,000, and keep the rest in the account. So you always build that cushion. One of our great traders, Michael Tarantula, is also on the YouTube channel. You can see the interview with him. I think I did 2 at least. He has a great account, like a great buffer that he built, and he's not withdrawing too much out of it. He just took, I'm guessing, like 10 or 12,000 the last time that he withdraw, but he always get that 20, 30, 40,000 in the account. So whenever he has a bad day, he can actually, or even a few of those, he can actually easily recover. So that's the mentality that you want to build. And we actually allow you as a prop to build that because it makes sense to us as well. We don't want you to blow the account. We want you to continue to trade and make that profit. So if you build that cushion, we are both on the safe side.
I've seen this question arise maybe 3 times now. The constraint of the 45 days limitation. Are there plans to remove it? Interesting question.
Well, there is, but I'll keep it that way right now. Once we will have some updates.
You gave in, Michael. You shouldn't have.
You want to get more out of me.
But thanks for asking, guys. I mean, if it keeps repeating, I mean, I guess Michael just gave in. Look, we had a lot of questions, seriously. Alex just dropped by, one of the funded traders that we interviewed recently. Maybe 3 or 4 or 5 just from the current ones. Hi, Alex. Also, there's a question here. I think, what was your biggest single withdrawal we've processed? I think we mentioned it already. Like 70,000?
Yeah, roughly.
It's great. Wow. How do you even get that?
It's more than great. I mean, that's... but again, this is exactly what I mentioned just a minute ago, right? It's not really about how much someone made in one take, one payout, right? It's about building consistency. If you shift your mind into thinking that way, then it won't really matter if you take in $70,000 in one take, or you actually break it down to 5K or 5 something every month, right? Just start and building that consistency. And every great performance, and what we do in trading is performance based, right? So every great performer like Kobe, Shaq, Jordan, LeBron, anyone that you follow or admire will say the same thing. You will literally hear them saying the same thing on YouTube or podcast that they did or books, whatever it is. It's about continue to work, continue the process, right? Moving the needle. And when you're doing that and not looking for that one-time shot, but actually performing well every time that you go on the field, this is where you see consistency and improvement along the way.
That's right. Got a few questions. This GR Murad, he was asking the Visa Debit prepaid card. Is it available as a payout option? And if not?
Sorry, I just read about what Mike mentioned in the chat, but I'll talk about it in a second.
I am too. I'm the old Lakers. I'm a fan of. I grew up with this Lakers. I loved it.
Okay, we'll cover that in a second, Mike. Which one are we talking about? Sorry, I lost it.
GR Murad. He basically is asking if the prepaid card, Visa Debit prepaid card, is it still available?
Oh, okay. Currently not. The prepaid we do, for those of you who've been with us for a while, we had like a Visa card where you can actually use virtual Visa and put it on your Apple Pay or Google Pay. Currently not. The company that we worked with, they are working on improving their tech. They did have some issues, and once it will be done, we will return to that. But that was an amazing solution, in my opinion.
Alex Cardenas.
Wait, before that, I got to touch.
Go ahead.
Mike, first of all, although regardless of Lakers or not, those guys that I mentioned are the top, right? I also mentioned Jordan, by the way, but those are the top. So we cannot take that from them. They are really at the top of the 10 top players of all time. So that once. Second, when Kobe and Shaq played, I mean, you can't really ignore their game, right? When they used to play, that was incredible to watch. That amazing, seriously. But I'm a fan of the game. I'm a fan of watching great basketball or soccer. Depends on who's playing it. But yeah, and I did have time with Lakers, also time with Jordan and the Bulls. So yeah.
Just don't mention the Sacramento game. Don't mention it, please. Don't worry about it.
Yeah, right.
Look, Alex Cardenas gave us really a good question. Look, he heard us say about tell the traders, right, that we are looking at the program changes, and he's asking, is it even worth it for me to still try, even though I know now that there are improvements?
Yeah, no doubt. I mean, the improvements that I'm talking about are going to be, obviously it's improvement, but I want to say it's going to be a bit different than what you're already familiar with as for now. So definitely give it a shot. I mean, it will take us a minute to get this out. So you can pass the evaluation until then and continue obviously to trade with the one that you pass. So that's totally fine.
And Cristonio here asked, he's an experienced trader, and he's asking if he can bypass just to getting funded straight away.
It's a rare case, a very rare case, because the thing, as I mentioned, it's not about, you could be a great trader on your personal account with a broker, but it will take you sometimes to adjust and shift what you're already familiar with to the prop trading account, right? So that on one end. On the other end, we have many traders that failed their account, like the classic broker account. They actually didn't make profit on their broker account, and with us, they're profitable and been running with us for quite a while and made profit and all of that. So it really, there is a difference between trading your broker account and your prop account, and you need to give yourself that opportunity to learn it, adjust to it. And this is why we have this evaluation as well, even if you're an experienced trader, unless this is something really, like I said, a very rare case that we consider. But first of all, evaluation, prove that, and then prove to yourself that you can do that and adjust yourself to it, and then it will be much easier for you to pass. We did have guys that passed within 2 days, even 1 day, if I'm recalling right, Carlo.
Yeah, well, yeah, 1 day. Yeah, a few actually.
So pass the evaluation, first evaluation, and pass it within 1 day. So it's not that difficult once you have everything aligned, especially if you come with experience.
Some other nerd, which is a weird name, but let's just go with it. He says, I think if your challenge expires, you can pay for another challenge. I think he was trying to answer someone's question. Yeah.
Yeah. So first of all, you can try the evaluation as many as you need, as I always mention in the videos. And this is something that I gotta say that maybe most prop firms out there on the futures and forex side won't tell you that, but I'm proud to say that actually most traders will need few attempts in order to pass the evaluation. Like I said, there are guys that can pass it within a day on the first attempt, but most traders, they will need this 2 to 5 times to pass the evaluation. It's, like I said, a measure of getting familiar with the trading platform, of course, but this is why you have a demo account that you can play with, but also tweaking your strategy and get used to the fact that you have those set of rules to keep you in those boundaries. So this is why it takes a minute to pass it, and that's one thing in regards to that. So you can do that over and over again. And it's incredible to see, and this is also in some interviews, guys that actually did it like 15 attempts, 15 times. Listen to that. The guy did it 15 times and passed it after 15 or 16 times. 1-6, yeah. And it's incredible to see two things here. One, the incredible motivation that he has for continuing and doing it no matter what, and still pounding it in order to pass the evaluation. That's incredible. Like the mentality the guy has, it's absolutely amazing. This is something that comes from within, the ambition of actually not giving up. So that's first thing that I love. The second thing is, even after 15 times that he failed and paid, he took the mini buying power, right? The $97. He paid 15 times the $97, so let's say $1,500. Even if he paid $1,500, it's better for him to try the evaluation 15 times, pay $1,500 and pass it, comparing to take the same $1,500 and put it in a broker account. Just think it over for a second. You cannot do anything with your broker when it comes to trading with $1,500, but put it into evaluation 15 times and pass it and trade in $20,000, that's unbelievable. So those two are still incredible to think about and just to grasp.
Alrighty. Pau Voe just recently gave us a comment here. Pau View. Can you guys remove the 14 days reset after the growth target hit on a mini account? You won't be able to withdraw at all if I keep hitting the target every week because it's resetting every 14 days. It's a bit of a flex, actually.
Yeah, and as I mentioned before, we are working on a few tweaks, so stay tuned. Cannot elaborate.
Alrighty. I mean, Mike mentioned here that he's fine. He's also a huge Kobe fan. He said
Okay.
Le Flop, not so much. I like you. I like you. I'm the same. I'm a big Lakers fan. I grew up with Lakers. I mean, I'm a kid of the '90s, right? So I grew up Shaq and Kobe. When it became the LeBron era, I just like it's not for me. I'm sorry, but you know, to each
I
their
can
own. To
relate
each
to
their
that. I can relate, but let's keep it on the trading side. But I can relate to that. He's a great trader, a great player, obviously. But I can understand that Kobe and Shaq was different, though Kobe obviously was much different in personality-wise, I'm guessing.
Maybe we can use the Mamba mentality. Maybe we can create a strategy, the Mamba trading strategy.
Yeah.
Hey,
Trademark.
copyrighted.
Yeah, exactly. What else do we
Jack,
have there, Carlo?
Jack's, I mean, a similar question. He's thinking of buying another account. Should he wait?
Go ahead and do that. Again, go with the mini. Don't go too big. Understand first what to do with the account. See that you get consistency, and then if you want, go bigger. But first start with the small one. It will take a minute until we will launch some changes, and it won't affect what you're doing right now.
We have a few new questions actually. Mustafa again. He's very active today, Mustafa. Appreciate it. Will we see a bigger account size?
Currently not. Might in the future. The thing about it is that on the other side we can scale the account, right? So if you take in the 260,000 and you reach the target every time, the 10% target, then we scale your account. There is no limitation currently on the scale part, so you can literally continue to scale it over and over, but not from the beginning. So currently, at least, we don't have 500,000 or 1 million. That's a huge account, and we need to control the risk.
But I mean, look at like Michael mentioned, it does scale. So in a way, if you think about it, if you keep being consistent, it's essentially unlimited, right? So,
eventually, yeah.
Some other nerd asked about options.
Yeah. So right now we don't have any plans to add options to our platform. We do have, like I said, some other very cool stuff that we're going to add to tradethepool, hopefully soon. But it won't be options, at least for now. And again, when it comes to options, the reason why a lot of guys went to options after the COVID is also because of the less buying power they need, right? Or the account could be small, but you can still buy an option that costs like $3 or $7. But when it comes to tradethepool, because you have enough capital, you can buy the underlying and won't really care about the capital wise. So that's about it.
We have a few questions. Look, it's very active. Thank you guys for giving us your questions. We really appreciate it.
That's amazing. We've been here almost 2 hours, and it's running.
It hasn't stopped. I thought it was going to stop, but then it kept coming.
That's amazing. I mean, now that we know that we have a lot of questions, we can easily do that every month or so. And at least when we don't have a trading day, when we can find a way. One guy asked about how do you handle your outside of trading. So this is a great way to do that, right? When you don't have any trading day, we can take a moment to go live all together and just talk about trading, answer some questions, pop up some charts, analyze them together, just to do that, to learn more and get more ready for the next week and in general.
Abdallah asked a question, actually a two-parter question. Don't worry, Abdallah, Abdi, we got you. There's so many questions. We're looking into it. So he says here, are you planning to add more stock exchanges? Meaning, I'm assuming besides the New York one. If there's a timeline, Just an idea, stuff like that.
Yeah. So first of all, the answer is yes. We will add eventually more markets in general. So you would be able to trade also some European and Asian markets. So that's something that we're definitely planning to do. And other exchanges within the US, this is also something that we're working on currently. Yeah.
Awesome. And also an extended question to that is that if so, you reckon he thinks that traders are willing to pay a subscription fee just to even access other markets. So basically.
Okay. Yeah. So again, this is also something that we're doing actively and working on. This will probably be, as you said, Abdallah, with an extra subscription for it. But yeah, once we'll get everything set, we will obviously update. This is a great time, guys, for those of you new to the trading world or our YouTube channel, at least, like, subscribe so you can stay tuned. And also, for those of you who didn't join the Discord community, go ahead and do that as well. Once you go to the hub at tradethepool.com, you will see an icon on the bottom left of Discord. Join our community. There's tons of lessons and live sessions and bunch of market insight that you can take from it. Talk to other traders, share your ideas, and just stay within the community, because as I mentioned before, trading could be super lonely, but once you have other guys that you can connect with, that's the first step, to push yourself furthermore.
Cristonio here has another question. It says, how can you pass the evaluation within a day if there's a profit consistency rule? It's a good question, but look, I mean, it really depends. But Michael can elaborate on this.
Yeah, sure. The consistency rule is about two things. First of all, if you're talking about the 50% consistency, then that's fine. You can trade 10 trades a day or 20 trades a day, and have this that the best trade won't go over your 50%. Second thing is about 3 profitable days that you need to have. It's on the funded account on some programs, right? Because we have the limited edition and we have the not limited edition, we'll call it. So it depends on that. Currently, for example, you can pass it within a day. Yeah. The interview, by the way, is on YouTube. So just go to the funded interview list. You will find the interview with the guy that passed it.
Zone Buster has more of a Discord question, and he or she asked, is the Discord live every day trading day? Is it a chat or live trading? Do you have to have an account to join?
Okay, so I think I covered that. First of all, you don't have to have an account like an evaluation account. You can just sign up to tradethepool.com. It's free. And then you can join the Discord. There are live sessions on Discord, some, for trading or for education. And we have every day, except from Friday, we have a live trading room here on YouTube. So you can just click the subscribe and notification, so you will get notified every time we are going live. And this is happening from Monday to Thursday.
All right. The questions have died down now, but we keep getting them. Jan Alves mentioned, Michael, do you accept a very recent one? He says, do you accept traders who trade for an average of 15 to 20 minutes per day?
That's a good question, Jan. The simplest answer is yes. And the idea and the fact is that we're not looking for, or we're not canceling we're not canceling someone that has a specific strategy. I mean, if you have only 15, 20 minutes to trade in a day, you need to, first of all, you're welcome, but you need to check with yourself if that is enough for trading, right? Because saying that you have 15 minutes a day to trade, it's a super rare case where you will find the exact entry that you need, and the market or the stock that you're trading will be at the exact moment when you need to execute a trade. And what about managing the trade as well? If you have everything covered around it, for example, if you mark the level in advance and you place the orders, and if it takes your limit order, then you in and you already have your stop loss and take profit, maybe that could work. But in most cases, you will need more than 15 to 20 minutes to trade. Yeah, that's the truth. So you need the preparation before that. You need the analysis after that. So just try to understand with yourself what it means to trade 15 minutes a day. I don't know someone that does that before.
Alrighty. King Burlington says, when are you guys going to accept other traders like micro scalpers that are trading less than a minute? We are accepting them. We are sort of accepting them already, if you think about it.
Yeah, to trade less than a minute. So first of all, you have the limited edition, the mini and the super, where it's actually 30 seconds. So you don't need to wait a minute between exit and entry. You can entry and exit. You can actually trade within 30 seconds. So you can just do that on the mini and the super. Yeah.
Alrighty.
And also King on that matter, there are guys that come in with a set of mind or a strategy at the beginning. They have something that they want to test and actually continue to trade like they do on their broker account. But then in time, they just shift it and modify it in order to fit the criteria or the parameters that we have. So this is also something to consider. Besides the fact, like I said, on the mini and the super, you can do that. Give it a thought, and maybe you can find another way to modify it to be in a trade 4 minutes and not 30 seconds, right? Just a thought.
We have we also have a question here. Giamura just at me, I guess if I wasn't paying attention. He says, adding new accounts. Giamura.
Okay, go ahead and find it.
He's saying that if I'm at a lower buying power funded account and I'm doing well, for example, 3 payouts or more, why do I have a new evaluation when I get a new account?
Yeah. Okay. I can't find the question, but I understand what you're saying. The reason you need to go through another evaluation is what I mentioned earlier. When you trade in the mini buying power, let's say $20,000, right? And you're getting used to 500 shares or 200 shares per trade, and now you want to go all the way to 260,000, for example, then the difference is, like, the range is too wide to just go and do that. You need first to adjust yourself to get used to the fact that you're trading much bigger size, like 10x that size. You will get more familiar with the profit and loss of the account. You will buy and sell more shares. You need to get yourself into a position where you feel comfortable of trading that higher amount of money, if a larger amount of money. So if you jump right to the funded account after you pass an evaluation of 20, it doesn't mean that you will perform right, at least at the beginning, on a 260,000. So that's the main difference. You just need to go over it, get used to that, show that you can do that on a bigger account, and then we can take more risk.
Alrighty, thanks for that question, Gia. another question here from Mike Nobles. Basically, the essence of his question was, is it possible to share the true success rate for a prop firm? And there's a general 5% rule, not rule, 5% general
Net passing.
percentage.
Yeah, I mentioned that a few times in other videos and interviews that I did online. We are roughly between 20 to 25% at passing, and this is a huge plus for us. Obviously, we want to achieve more, and we are working on that. One of the stuff that we're doing is by educating you guys and giving you more tools and more lessons. This is why we have our live YouTube channel. This is why we're literally doing this live right now, to answer those questions, to talk about trading. We have the community. We have the partners that we give you the tools like Bookmap, Trade Ideas, Spider, Trader Sync, all of those tools that we give you literally for free on that matter. And we are continuing to improve that and looking to get more value to you guys, to continue to push that. First of all, this parameter of the success rate, keep that and continue to push that even furthermore. This is incredible success rate comparing to the sector of the prop. And obviously, when you trade in your personal account, there is probably 3-4% that you will actually make it. So when it comes to trading with a prop, you automatically increasing that. And especially when we give you all of that tools and keep you, trading together with us, it makes more sense that you will see a higher success rate.
That's right. I mean, just to extend that Michael's answer, we do generally get about 3 to 4 or 2 to 3 really from our funded traders. That's how long it takes. It doesn't mean that one try they'll make it. I mean, it would take them a while, but they'll eventually get funded. That's
the thing that I talked about with one of the guys that passed after 15, 16 attempts. Because if you have the the ambition to actually do that, and you continue over and over again, you will pass it eventually. Because you're getting used to the rules, you're getting used to the platform, you understand what you're looking for, you adjusted your strategy. Now it's just a matter of a few attempts and you're done.
We have a few questions again. That's amazing. One of the questions is, what trading book helped you out the most as you were developing, Michael?
Yeah, I guess, when I started, there weren't any YouTube, almost. There weren't any YouTube videos. So books was the first thing, to go and do or read. The first one that I read, and it was by far the best one for me on a technical level, at least, is Technical Analysis by John Murphy. That was one on the technical level. So taught me everything, from the basic, just the understanding of it. Charles Dow theory, of course, patterns, supply and demand, all of those things. So John Murphy, Technical Analysis. And the second book that really helped me just to get the hang of it, of the stock market, right? On how a market, doesn't matter if the stock market specifically, but how a market works. That was a reminiscence of a stock trader, operator, stock trader. That will give you the idea of a market maker thinking. And I talked about it many times about smart money, dumb money, the cycle in the market, all of those things. And this is by far one of the, this is not, when you think about this, from time to time, you will get guys that will tell you, no, it's just a conspiracy theory and it's not real, the manipulation, all of those things. And then you read it in a book of someone that tells you, you know what, this is exactly what I did. I pumped the stock in order for everyone to get in, and I sold my shares on top of them, right? So it literally tells you that, and it's been, I don't know, like 100 years from, something around 100 years that passed from the beginning of that book when it released or published, and that's exactly what we have till this day. The market stay within the same cycle. We have buyers coming in, market makers pushing the price up. Once everyone's seeing the price movement, they jumping in because of FOMO, and then they can sell their shares, right? Or everyone that talks about stop hunting. This is it. Like, they take your shares, they take your liquidity in order to push the price up. They first take you out. Everyone knows how traders handle their stop loss, right? We all put our stop losses below the level or below the candle or whatnot, and then it's easy to drop the price, take everything out, shake everyone out, and then drive the price up. So technical analysis by John Murphy, one of the founding fathers of it, and the other stuff is, like I said, reminiscent of stock market operation. Great. The second book is something to read 2-3 times at least before you have everything, understand everything he's talking about. Mute, Carlo, mute.
It's not me. Someone else is doing it.
Someone,
it's a cat.
right?
There's an office cat, I think.
It's a cat.
Look, we're nearing the second hour, Michael. So I think we'd probably leave it at 2 to 3 questions, right?
No doubt.
All right. So Mustafa again, very consistent. Musti, you're very consistent. He says, what is the most common personality trait that you have seen in consistently profitable traders? It's a good question.
Okay.
Like what's similar among those funded traders?
Yeah, I think we touched a little bit about that. A few things. They build their buffer, the cushion. They lower their sizes, right? They don't oversize. They actually build it. And again, the mentality of consistency comparing to one lucky trade. They're not looking for that. This trade is the one to determine if I'm making money or not. It's a probability game, right? So when it comes to trading, you want to actually don't think of this trade that I'm taking, because this trade is just one trade out of 50 or 100 trades that you will make in a single month. So you want to start thinking macro. Even though you are a short-term trader and you're trading the 1 minute chart, you want to think macro. You want to think big, right? This one trade is just another one trade that will be in your statistic at the end of the month. So thinking of those elements will get you to the point where you're thinking more consistency and less gambling wise.
Alrighty. So I guess to answer the question, a personality trait will be like an open to experience, like open to criticism, right? Criticizing yourself, right? Basically, right? Need to be open for that.
Improving. It's just a matter of, always remember that it's a performance-based field. If you think in the way, and a lot of the times, I hear it on YouTube and such, that you want to read this book or that book that talks about psychology, trading psychology. I would actually recommend you to go and find books relevant to athletes, right? To like players. If you go and learn the way that the other guys did it on, like I said, NBA, football, soccer, whatever you like to play or listen to, watch, if you go and learn those guys, you will get a lot of sense and things you can take to your trading, because we are really doing the same thing, just going into the field and every day starting from scratch, a game start, and now I need to perform the best possible way. And after the game ends, I need to now go over my stats, understand what I can do better, and come back tomorrow with a better result and perform better, and have the full focus, understand what I'm doing the best way and such. So try to go to those areas, not necessarily within the trading area, but actually around it, that using the same elements or the same psychology that we do.
Awesome. Michael, do you want to sort of end it in a technical question or more of a general question? because we have too many questions. We cannot answer them. Hopefully, we can just comment on them later.
It's up to you. Take it away.
Right. So for you guys, I think a lot of you guys have a lot of technical questions. So we'll go with Evgeny instead. Apologies for the guys that are just commenting now, but we have answered your questions before. We'll go with someone who's fresh. Okay. So
and again,
Evgeny,
maybe Carlos, sorry, just a tiny bit before. Again, if you guys have any other questions, maybe we missed it or you just came up with others, drop them in the community on our Discord channel. I mean, go to TradeThePool hub, tradethepool.com, go to Discord, and you can just write it down there. There's tons of guys that been trading with us for a while. There are moderators as well that can answer that. And from time to time, I will jump also and can answer those as well. So feel free to drop any question that you have in the chat on our YouTube channel, YouTube or Discord. Yeah, go ahead. Sorry.
No worries, not at all. Tim, who manages the Discord, wanted to tell you guys that every Friday they do have sort of this big group trading event. So if you really want to sort of share it with someone and really get to know and to the nitty-gritty, they do it every Friday. They look at big market days. You can see each other's screens. You talk about strategies, and like they have you can even come in with text discussion. So on that, it is a community alive, and everyone's trying to improve with each and every day. So nice. We can end it with Evan's question, Michael. He says that when you're shorting penny stock for a day trade that have moved up to 50 to 100%, how do you know when to enter the short? And this is an EMA question. After the price breaks the trend line, EMA 20, 200 on the day chart.
Yeah, even I mean that's a big question, right? There are many ways to tackle that and to find the right tools, either indicators or the chart that will show you when it should start to drop. If you listen to our funded interviews on YouTube, you will find that a lot of them are short in penny stock, and they will tell you what they do. I usually ask them about that, and just to get the hang of how the strategy works. The concept is like at the basic of it, the core of it is straightforward. When you see an extension, or like you said, 50%, 100, 200%, you will try to find the next major resistance level on an hourly chart, for example, or a daily or weekly, depends on the stock and depends who's trading it. And then you will start with a filler. You will start to enter a position, not with a full 100% risk, but actually just testing the water. So that's once. I mentioned also before a volume increasing once reaching this extra major level. So for example, you see a major level on the hourly chart, and now when price reach that, you're also seeing major increase in the volume, right, on a 1 minute chart. Once you see those two parameters, you can understand that we might reach that moment that the price should decline. Now, of course, you won't know at the beginning. You won't know if that's it. That's the literally that's the top, and from here it will drop all the way, or it will be just a pullback. But this is a great place to start with a filler, just to test the water, see if this is the right moment to enter. You're not risking too much when you enter in with a filler. So let's say 20% out of your 100% that you're willing to risk on that trade. So like I said, $100 that you're willing to lose, instead of risking the full $100 on one click, you actually start with $20 risk. See that everything is going to your favor and you understand what's going on, and then you can add more to your position. So those are the two tools. Others, as you mentioned, for example, 20 EMA, let's say, so it reached that top, it started to drop, now it's breaking the 20 EMA or the VWAP, it's bouncing up again to retest it. So now the 20 EMA is resistance, and then you can add more to your position, for example, right? I like to see resistance besides looking at the price level on the hourly chart. I also like to see the 200 EMA tested on the hourly chart. So for example, if a stock just popping up, looking at the hourly chart with a 200 EMA and seeing that the 50% move up or the 100% move up just also reached that level on the hourly chart, but also on the 200 EMA. And then it gives you more indication that the price should decline. Adding the MACD or adding the price section and adding the volume, those kind of elements will help you to decide if that's the top. And again, maybe it will be like the top for now. So it will be a pullback that you can trade, and then it will pop up again. You can start looking for another parameters that will help you decide if we will get another drop.
All right. Look, that's it. Look, I mean, Michael, this guy keeps asking questions. Christonio, about the KYC. If you do not pass it, do you refund? I mean, I guess it's an easy answer.
Yeah, I mean, KYC, obviously you will pass it unless you're doing something shady. There is no, it's not that big. Just whatever we're doing on the KYC is super straightforward. And we won't refund it. So you need to make sure that everything you do is correctly at the beginning when you start. Once you pay for the evaluation, we obviously use the fees to create this operation, paying for your data fees that are free, paying for the partners software that you chose, and other stuff that we provide you. So just make sure you will pass the KYC. If you did everything right, there is no reason for you not to pass. There are literally less than 10th of a percent that won't make it.
Well, all we're getting now are thanks and cheers, Michael. And Evan, the guy who asked that technical question just before, said good advice. Thank you. That's great.
Amazing, guys. So we will wrap it out here. Thanks so much, first of all, for coming. This is incredible seeing you here and staying with us. And also, if you like this, let us know. You can send an email. You can write it in the Discord, whatever it is. And we will continue doing that on days off. We have 10 or 11 days off during the full year when the US market is closed. So we can definitely do some questions like that. We can go to the charts and analyze stuff. And we learn a lot from what you just write in and the questions that you drop in the chat and also in the form. So we can improve also our service and our company in general in order to, just go together and build a better company for both of us, basically, because we are partners in a way. And that's it, guys. For those of you who didn't join yet, go to tradethepool.com, read all about it, and we'll see you next time. Thanks so much. Take care. Thanks, Carlo. Appreciate it.
You're welcome. You're welcome. Bye, guys.
Bye.